Coming up on today's program, I'm going to share with you forgotten dividend income strategies. And when you think about it, dividends are such a big and popular investing category, it's almost hard to imagine that there could actually be some forgotten or overlooked ways to supersize your dividend income. So if you own stocks or ETFs, I think you're going to really like what I've got for you. More right after this. I'm Ron DeLegge with ETF Guide TV. Thank you for joining me. It's great to have you with us. On today's episode, we're going to examine some forgotten dividend income strategies. Now, before we get into that, I want you to check out my viewer resources section in the description area below. I've got online classes, I've got free ebooks, I've also got a portfolio grading service where I'll analyze and grade your investments. So there's a lot of excellent resources for all of our beloved viewers like you. So I want to begin by arguing with you. What better way to begin an episode than with an argument, right? And it's the internet and it's social media. So everyone wants to argue, why not us? But we're going to limit this argument on today's program to the reasons why dividend investing makes a whole lot of sense. So that's the angle. Chart 2 shows that dividends are beneficial and appealing from many different angles. First of all, you get median income. Who doesn't like that? You also get to supplement your cash flow from your other activities with dividend income. So if you're working or if you're getting passive income from other sources like real estate or what have you, well, dividend income is just another income stream to add to the mix. You also get paid while you're waiting for your stocks to increase in value. And then there can also be periods when stocks obviously are not performing well, right? So collecting dividends can neutralize those periods of time when stocks are negative or not performing very well. So these are some of the appealing reasons why to consider dividend investing, or at least adding it to your arsenal. Here's a nice historical chart. We talk about the total return of stocks and ETFs. It's important for you to understand that there are elements to that total return. You've got the actual performance return of the stock or ETF. You've also got the dividend that you collect. And when you add both of those components together, you come up with what's called your total return. And sometimes we forget this because we're so focused on the price performance of our stocks and our ETFs that we ignore the contributing role of dividends. And it can be quite significant. This neat little chart shows us a historical look at the percentage that dividends have contributed to the total return of the S&P 500 index. And as you can see here, it's been significantly higher in some decades like the 1940s, whereas in other decades like the 1990s, the contribution of dividends to the overall total return was much lower. Not everyone can or wants to necessarily reinvest their dividends, but those who can. This chart illustrates the power of compounding returns when you reinvest your dividends. And this example looks at the S&P 500 index with and without dividends. And it does it over a 60-year time frame. And as you can see, it's a significant advantage, $3.2 million advantage for people that were able to reinvest their dividends. So it's just something to keep in the back of your mind. Again, you can compound in your favor when you reinvest those dividends. Now, when I think about dividend strategies in the ETF marketplace, it sometimes I get what's called information overload, right? And it can get to the point of where I've got sloppy joes and scrambled eggs, and I lose focus and I'm mixed up. And so what I like to do to organize my mind and think about dividend strategies in the ETF market, I like to organize them into 4 categories. So there's ETFs, for example, that own stocks that are growing their dividends. Then you got ETFs that have the highest yielding securities or stocks. And then you've got ETFs that are investing in high dividend industry sectors. And then you've got the specialized dividend strategies, which encompass this broad swath of strategies like targeted yield, covered call income, and so forth. Now, there's a loyal viewer by the name of Daniel who emailed me. He's from New York, and he asked me to examine the new SOFI ETFs that pay dividends on a weekly basis. Now, these were just launched here in the past month or so, and these funds, Daniel, fall into this particular category of specialized income. And unfortunately, they're so new that they lack any real performance history or dividend payment history. So while I'd love to analyze them, I can't, because there's just not enough data. And I nevertheless find this concept, though, of collecting weekly dividends, and that's what these ETFs do. It sounds pretty interesting. So I'm going to keep an eye on these, and certainly you're welcome to ping me, Daniel. We'd love to re-examine those ETFs once they get a little bit more performance and dividend payment history underneath their belt. And who knows, they may even be the kind of ETFs that make it onto ETF battles. So stay tuned for that. These newer funds, again, just need a little bit more time to cook. So dividend growth ETFs are focused on stocks that are increasing their dividend payments. The emphasis is on dividend growth payers. And this is very important. This is a much, much different strategy than high yield or high dividend payers. So the ETF firm, the index that it chooses to execute this strategy will often screen companies that meet a certain criterion. For example, of increasing dividends over a period of, let's say, 10 years. Some even go longer than that. So these are the factors that these index ETFs use to screen high dividend or dividend growers in the portfolio. Here's some examples of popular ETFs that follow this strategy. The Vanguard Dividend Growth ETF, VIG. You've got an iShares ETF that does this, and also one from Wisdom Tree. And some of these ETFs, I should mention, have been featured on ETF battles. So those of you wondering, well, which of these is the best, strategy? Which one should I pick? Well, ETF battles will help you figure that out. The analysis provided on this show is just tremendous. Anyway, I'm going to provide a couple of links to some of these ETF battles of dividend income-focused ETFs in the description section below, so you can check that out. Now, in terms of the other strategy that I want to mention here is you've got the high-income ETFs. So these ones are focused on just the securities or stocks that have the highest dividend payouts. And that's the emphasis. The emphasis is not necessarily if those payments are growing, it's just the current yield, who's got the highest. And so that's how these index ETFs will often screen. Here's a couple of examples of ETFs that follow this strategy. You got Global X Super Dividend ETF, SDIV, SPYD, and then VYM. And generally speaking, these types of ETFs will have a much higher yield versus the previous strategy, which is the dividend growth. Now, for those of you wondering, well, which one do I use? Well, the correct answer really depends on your philosophy towards investing, and also depends on your current place in terms of your career, right? Are you still working or are you retired? And the reason I say that, because if you're still working and you're making income, then the focus should be probably on growth. And so you may employ like a dividend growth strategy because you're not really concerned about getting lots of current income because you're already making an income. You're working. So you want to be able to compound your money and have it grow. So growth may be the focus. Whereas if you're retired, if you're nearing retirement or already in retirement, at that point, your focus changes, right? And the strategy probably becomes more of a high income strategy, right? You're looking for immediate income to complement your Social Security income. Maybe you got a pension, maybe you've got some passive income from real estate. So you're putting together all these different income streams. And so high income could certainly fit the bill in terms of helping you meet your daily living expenses. Now, we're going to focus on this other area. And this is for those of you wondering, well, when's he going to talk about the forgotten dividend income strategies? Well, I saved that for the final portion of today's video. And industry sector ETFs is going to be one of those areas where we discover one of the forgotten ways. So this is a real interesting strategy for you dividend income investors. So focusing on high industry sectors. Now, there's a couple of areas that really jump out at us and that come to mind, and I'm going to share that with you in a second, in the equity market. But you can also approach this from high yield sectors in the bond market. And you can also, again, do this with ETFs. And the ETFs do most of the heavy lifting for you, right? So you don't have to research the individual bonds or the individual stocks that are engaged in a high dividend strategy. So in terms of sectors and specifically equity sectors, if we look at the S&P 500, these are the areas that really jump out in terms of paying a pretty good dividend yield. You got utilities, XLU, and real estate, XLRE. These are two dividend paying industry sectors. And if you're into dividends, well, these are the areas that you should take a look at. You've also got in the bond market a forgotten way that I think is really overlooked, and that's preferred securities. Preferred securities are kind of like this hybrid between stocks and bonds that are often forgotten. And one of the reasons they're forgotten is because investors are often arguing amongst each other. You got the bond investors arguing with the stock investors about which is the better way to get more income. And so preferred securities are kind of like the middle ground. It's like I said, it's a hybrid between stocks and bonds, and they offer an excellent middle ground for dividend income investors. Here's an example of one ETF that I think is worth taking a look at. It's PFLD, and it's one of the top preferred ETFs. It's got an attractive yield near 5%. It has reasonable costs. And I recently did an interview with Lance McGray at AAM all about PFLD. And if you missed it, I've got a link below to that interview. Again, it's in the description section, and you can check that out. Specialized income strategies. So this would include things like selling covered call options, which here too is another forgotten income strategy. It generates income on your ETF holdings. You can also do this on individual stocks. And covered calls, it's not for everybody. If you don't want to do it for yourself, there are actual ETFs that'll do this for you. But for the purposes of this particular discussion, I want to focus on you doing it yourself because it's a really, really awesome strategy for supersizing your dividend income or your cash flow. So most index ETFs, including the big ones like SPY and QQQ and many others that have a lot of assets under management and a lot of trading volume, have call options trading on them. And so you're selling those call options will generate immediate income for yourself. And you can customize that income. You can sell it on a monthly basis and collect call premium, or you could do it on a weekly basis. It's completely up to you. Now, the disadvantages of selling covered calls is it limits or caps your upside, right? So in exchange for selling a covered call, if you're selling it out of the money and at a higher price than what the current share price of that ETF or stock is, right? Then what's happening is you're capping your upside to that strike price. So if that strike price gets hit or the security goes above it, you could run into a scenario where you actually have to sell that ETF or stock, and a sale could be triggered. So this is not a very efficient, from a tax perspective, strategy in a taxable account. This would be more something like in a Roth IRA account or a traditional IRA account, or if you are able to have some trading flexibility in a 401k type of setting, this is something certainly that you could consider doing. So this is another one of those forgotten strategies for generating more cash flow and more dividends. And I think in another video, I'm going to get into the nitty-gritty of selling covered calls with some case studies and give you some examples of how to execute such a strategy, because I think it's a really, really overlooked and forgotten way to generate additional income inside your portfolio. So key takeaways from today's program. Well, you got to choose a dividend strategy that conforms to you, that suits your needs and your goals. If you're, like I said before, a younger investor, you might be looking at more of a dividend growth strategy. Whereas if you're already retired, then you might be focused more on an immediate type of high income strategy. Dividends, as you saw, we looked at the history. They've accounted for over 84% or about 84% of the S&P 500's total return over the past 50 years. That's tremendous. It just shows you how important dividends are in delivering an overall total return to your overall return as an investor. So dividends, you cannot ignore them. Dividend ETFs simplify your search for more income, so you don't have to search out those individual bonds or stocks. And then, as we mentioned, the forgotten income strategies, preferred securities, and selling covered calls. So that does it for today's program. If you've enjoyed today's episode, be sure to hit the subscribe button. Don't forget to check out my viewer resources section below. I offer online classes. I've got a portfolio grading service. We also have free ebooks. And I look forward to seeing you next time. I'm Ron DeLegge with ETF Guide TV. Thanks for watching.